Hello, everyone, and welcome back to another episode of the David Hittle Real Estate Show. I am your host, as always. I am Hittle. So, today we're going to talk about the increasing mortgage interest rates. Because dreadfully, unfortunately, they are on the rise across the nation. Dreadfully, because it impacts our housing market and it impacts our buyers, our home buyers, and our home sellers that are trying to make it all work. So, this week, according to Freddie Mac, who is the organization that's responsible for keeping up with all this and reporting it to us, mortgage rates topped 3% this week. And in actuality, they hit 3.02% on a 30-year fixed rate mortgage. The interest rate on a 5/1 adjustable rate mortgage fell to 2.73, and the 15-year fixed rate mortgage increased to 2.34%. So home buyers may not be happy because the 30-year fixed rate mortgage topped 3%, averaging 3.02%. However, we should all note that mortgage rates remain near an historic low. In actuality, 3.02% is only 0.37% higher than our record low, which was set in the first week of January, 2.65%. So 3.02% is only 0.37% higher than that. Since reaching the all-time low in January, mortgage rates have risen by more than 30 basis points, 0.30, and the impact on demand has been noticeable. While purchase activity remains high, it has cooled off over the last few weeks and is currently on par with early March prior to the pandemic. Still, the prediction is that the rise in mortgage rates over the next couple of months will likely be more muted in comparison to the last few weeks. So again, they're predicting that we will be around a 3% average for this year. 3% again is still near historic lows, and we'll get into that here in a bit. The job gains may help lift buyer demand regardless of what the mortgage rates do. The Commerce Department reported Friday that the country added 379,000 jobs in February, which may counterbalance the rising mortgage rates. The real estate market will experience countervailing forces of the higher push for more jobs, but also the pullback of higher mortgage rates. We will have to wait and see which force will be stronger. Back in 2018, the economy roared with 2.3 million job creations, but home sales modestly declined because mortgage rates rose from 4% at the beginning of the year to 4.6% by the end of the year. So if that holds true, that increasing jobs but also increasing mortgage rates will make housing demand fall, then home sellers or homeowners who are looking to sell their home but may have paused because of the pandemic may be in a bad situation. They may have missed their opportunity to get top dollar. It is all about supply and demand. I always say this, and I always will say this because that is the way our economy is based. Supply and demand. Right now we have low supply. We had high demand. If supply is low and demand is low, the prices of homes is going to fall until that demand ramps up again. So right now we have home builders that are attempting to increase our inventory. They're attempting to increase our supply. But if mortgage interest rates increase and home demand decreases while supply is increasing, then again, same thing will happen. Home prices will have to come down in order to find the demand. The issue is rising home prices are causing home buyers who want to buy homes to be priced out of the market. In order to counter that, home prices will have to come down. Home prices will have to come down in order to match what the average or what the home buyer's purchasing power is. We may start to see less bidding wars. We may start to see less multiple offer situations because there just won't be the demand. There won't be the home buyers like there was when interest rates were below 3%. So, again, if it holds true, I don't see, in my own personal opinion, I do not see 2.3 million jobs being created. I don't see that. So I believe your job creation will be lower. And I see interest rates maybe staying in the 3 range, maybe hitting the 3.25, but we do not know. They've already increased 0.35 since the lows in the first week of January. So is 3.5 our future? Is 3.75 our future? No one knows. And mortgage interest rates really don't follow any set of standards. Some economists say they follow the treasury yields. However, some say they don't. Treasury yields are going up. So, what do we say? If the economists that say that interest rates follow the treasury yields, then treasury yields are going up. Therefore, mortgage interest rates will go up as well. It is all a matter of what the market has to say. But again, 3.02% is still historically low. Let's look at it this way. On a $200,000 loan over 30 years with an interest rate of 3.02%, you will pay $104,000 plus $104,000 then some in total interest. So your $200,000 home with a 30-year loan will actually cost you $304,000 over that lifetime of that loan. Your principal and interest payments on 3.02% at $200,000 is $845.37. Again, that's your principal and interest. Doesn't include taxes, doesn't include PMI, doesn't include insurance. At 3.29%, so 0.27% higher, that is what we had this time last year, 3.29%. Your total interest is about $10,000 higher, $114,000. And your P&I, your P and I is 800 then at 3.02%. Again, still historically low. Take 1970. I was not alive in 1970. My parents were. I'm assuming probably around that time they may have been looking to buy a home. But in 1970, the average mortgage interest rate was 8.86%. Think about that, 8.86% in 1970. On a $200,000 loan, on a $200,000 loan, the total interest would be $372,000. So in actuality, at 8.86%, a $200,000 loan over the 30 years would actually cost over $572,000. Amazing. You're going to pay more in interest back in 1970 than you did for the loan itself. Amazing. The P&I on 8.86% on a $200,000 loan was almost $1,600. But it got worse. It got worse. The average in 1980, I was born in 89, so right at the end of the decade, 1980's average mortgage interest rate was 12.7%. At 12.7% on that same $200,000 loan, you would have paid $580,000 just in interest. Make your $200,000 loan a $780,000 loan. And your P&I, $2,100. 1990, they were a bit lower than 1970, 8.12%. $334,000 was your total interest. By 2000, the average had fallen to 6.29%. Again, on that $200,000 loan, you're still paying $245,000 in interest. Still more than the loan itself. By 2010, 4.09% was the average. Finally getting it below what your total loan was, $147,000 for your total loan. So again, look, think about that. 1970s, way more than your loan. 80s, way more than your loan. Almost triple your loan. 1990s, more than your loan. 2000s, 45 grand more than your loan. By 2010, a little less, about 50,000 less than your loan. So 3.02%, only 104,000 in interest. So your $200,000 loan is a $304,000 loan, but it's not a $347,000. It's not a $445,000. It's not a $534,000. Historically low. So while rates are going up, historically 3% is still a low rate. But again, what I will tell you is this. If you are going to buy a home this year, if it's on your agenda, you're planning for it, you want to buy a home, do it now. Do not sit and wait for these interest rates to maybe go down. Maybe go down. They've gone up over the past 5 weeks. Or they've gone up over the past 5 weeks. Don't look for these rates to go down. I'm suspecting 3.25, maybe 3.5. Don't wait for it. If it is your goal, if it is something you're going to do this year and you are ready financially, credit score, debt to income, if you are ready, do it now. Get out there, start the hunt, start looking for that home, start having it constructed. Whatever your plans are for your home, get it going now. Don't wait, because waiting may cost you thousands of dollars. Just look, 3.02 to 3.29. It adds $10,600 over the lifetime of the loan just in interest. Do not wait. Do not wait. Do it today. So, with all that being said, is buying a home today smart? How smart is it to buy a home today? Well, that's a simple question. Maybe a simple answer, but it depends a lot on your financial situation. So think about these two questions. Do I think home values will be higher a year from now? And let me just give you some numbers for that. Last year versus this year, 2019 versus 2020, home values rose 9%. So a $100,000 home in 2019 now worth $109,000. Increased 9% year over year. So do I think home values will be higher a year from now? The answer for me to that question is yes. Number 2, do I think mortgage rates will be higher a year from now? Well, we started 2021 with a 2.65% interest rate. We are now at 3.02%. The prediction from all the experts, between 3 and 3.2 for 2021. Do I think mortgage rates will be higher a year from now? My opinion, the answer is yes. So from a purely financial standpoint for you, if the answer is yes to either question, you should strongly consider buying now. If the answer to both questions is yes, you should definitely buy now. Let's see why that is. So they do the numbers a little different. And nobody can guarantee what home values will or mortgage rates will do. The experts, however, seem certain the answer to both questions above is a resounding yes. Mortgage rates are expected to rise. Home values are expected to appreciate rather nicely. What does this mean for you? Let's look at how waiting would impact your financial situation. So here's the assumptions. The experts are right. Mortgage rates will be 3.18% at the end of the year. So 3.18%. That would be 0.16 higher than today. The experts are right. Home values appreciate 5.9%. So just about 6%. You want to buy a home valued at $350,000 today. You decide on a 10% down payment. So here's what you get. Purchase today, $350,000. Mortgage rate of 2.97, so a little lower than today. And They can fluctuate depending on if you're VA, USDA, FHA, conventional. You can buy points, etc., etc. So you could see a 2.97%. Your down payment on $350,000 is $35,000. Your mortgage amount is $315,000. Your mortgage payment is $1,323. And when you move into the home, you have already earned $20,650 in equity. But you decide David's wrong, the experts are wrong. I'll buy my house next year. Okay. So your $350,000 home next year is now a $370,650 home. Your mortgage interest rate's 3.18%. Now your down payment is $37,065, not $35,000. Your mortgage amount is now $333,585, not $315,000. Your monthly mortgage payment is $1,400, $1,439 versus $1,323. And your equity gained is zero because you waited. That's the figures. That's how you do it. That is the financial impact of waiting. You pay an extra $20,650 for your home. You'll need an additional $2,065 for your down payment. You will pay an extra $116 a month in mortgage payment. That's an additional $1,392 a year. And you didn't gain the $20,650 increase in wealth through equity buildup. So, again, there are many things to consider when buying a home. It is your largest investment. It is your nest egg. Don't rush into it. But if you're going to do it, if you are financially ready to do it, if your financial situation is stable, if your debt to income is where it needs to be for a loan, if your credit score is where it needs to be for the loan, what are you waiting for? What are you waiting for? You need to be out there looking. You need to be out there hunting. You need to be out there finding the home that fits your needs now, your dream home. That is what your dream home is. It is the home that fits your needs today. If you are looking to purchase a home, and again, I'm not trying to rush you. I'm not trying to pressure you. I'm giving you the facts and letting you decide for yourself what is best for you and your family. But if you are ready to make that move, I want you to give me a call, or I want you to text me, or I want you to send me an email. Let's get started today towards your dreams, towards the dreams of home ownership, rather than sitting and waiting and hoping and praying that something changes when the change may not be in your favor. The change may be negative in the long run. So if that is you, if you are looking to buy a home this year, I want you to reach out to me. All of my contact information is in the description of this video and every single video I do. I want to hear from you so that I can help you. That is what it's about. It's not about me forcing my opinion on you. It's not about me persuading you to buy a home. It's not about me doing any of that. I give you the facts. I give you the information. And if it is the right time for you, I am here to help. That's my job. I'm here to guide you along the way. For the other side, Is it a good time to sell my house? So again, in the selling realm of this, there are things to consider as well. The seller, the home seller, while he has he's behind the driver's seat, he or she's behind the driver's seat, he or she's actually in a more complex situation. Because not only is a home seller, they are normally also a home buyer. So not only do they have to worry about getting their house sold, they also have to worry about getting into their new home. And getting into their new home without owning two homes, and getting into their new home without selling their current home first and becoming homeless before they can get into their next home. That's what a realtor is for. Is it a good time to sell my house? The latest Home Purchase Sentiment Index by Fannie Mae shows that 57% of consumers believe now is a good time to sell. So if you have thought about it, if you have thought about selling your home, thinking about selling your home, you are in good company. 57% believe it is a good time to sell your home. Overall, the index's monthly increase was driven largely by a substantial jump in the share of consumers reporting that it's a good time to sell a home, with many citing favorable mortgage rates, high home prices, and low housing inventory as their primary rationale. It sounds like to me that those 57% have been listening to my show. They're listening to the professionals. Normally, spring is the busiest season in the housing market, the time when many homeowners decide to list their houses. While this is obviously not a normal year, since the pandemic is still very much upon us, experts are optimistic that consumer positivity around selling will lead to more homeowners making moves this year. So, what does this mean if you are thinking of selling your house? The fact that there are so few houses available for sale today is one driver that's encouraging consumers to think more positively about selling their home. The National Association of Realtors, which I'm a member of, says that total housing inventory at the end of January amounted to 1.04 million units. 1.04 million. That is down almost 2% from December, 1.9% from December, and down 25.7% from 1 year ago. 1 year ago, we had 1.4 million homes. Today, we have 1.04 million homes. That's a difference of about 360,000 homes. With so few homes available to buy, your house will be more likely to rise to the top of an eager home buyer's wish list in this competitive market. Today's high buyer activity is creating upward pressure on home prices. We've talked about that. And more multiple offer scenarios. For a home seller, that's a great thing to have multiple people after your home. According to the Realtors Confidence Index survey from the National Association of Realtors, the average home for sale is receiving 3.7 offers today. So almost 4 offers for your home, up from 2.3 offers just 1 year ago. This makes selling even more enticing, or at least it should. In this kind of seller's market, you The homeowner have huge advantages in the process, and here's another win. You can also use your equity, the profit that you're going to make when you sell your home, towards a down payment on a new home when you move. Wondering where you'll go if you try to move while it's so challenging to find a home to buy? Well, in many areas, there are more homes available at the higher end of the market. So finding a move up home may be less of an issue if you are ready to search for your dream home this spring. So again, I'm not here to pressure you. I'm not here to rush you. I'm not here to tell you what to do. My job, as I feel it, the heart of a teacher, is to give you the information, to give you the facts, and let you come to a decision. All I ask is that you allow me to help you. I provide the information, I give you the facts. All I ask in return is that if you decide to do anything, that you let me help you with that. That's all I ask. It's not much of an ask. I'm here to help. That's my job. That's what I love doing. I love helping people buy and sell homes. And you have to love it in order to be a realtor. And as a realtor, as a member of the National Association of Realtors, I always put your best interests at heart. So again, if you've paused your home selling because of the pandemic, if you didn't sell last year because of the pandemic and you want to sell this year, you actually did great because home prices rose 9% in our area. You actually made a great financial decision by pausing last year and going into this year. Only challenge now is rising interest rates. If they rise too much, fewer buyers in the market. If they stay historically low like they are today, you can still receive top dollar for your home and you can get in on those great low interest rates when you go and buy your next home. So, I hope I've taught something. I hope I've explained it in a way that's understandable for everyone. And all I ask is that if you have any questions, comments, or you're planning on making a move, reach out to me. I'm here to help. That's what I'm here for. I hope everybody has enjoyed this episode of the David Hittle Real Estate Show. It is brought to you by United Real Estate Louisville. If you are a real estate agent, maybe you're watching the competition. Don't blame you at all. If you are a real estate agent looking for a new home, I do suggest United Real Estate. They are all over the country. And if you are here in the Louisville, Lexington area and want to become part of our team, United Real Estate Louisville is the agency for you. Have no bones to pick at all. I am the social media superstar, according to United Real Estate Louisville. So until next week, we'll have a brand new topic. We will learn something else new together. Again, you need to talk to me. You can find all my contact information in the description of the video. I hope to see you all back here again next week. And until then, have an amazing week and enjoy spring. Looks like the groundhog was wrong. Thank goodness. Everybody have a great day.